Picture this. The world's largest construction site is grinding to a halt. We're not talking about one building or one city. We're talking about an entire nation that built more housing in the last decade than the rest of the world combined, and now that unstoppable machine is sputtering out. China's softwood imports have been cut in half over the past 10 years, and if you think that's just a lumber story, you're missing the massive earthquake happening beneath the surface of the world's second-largest economy. Before we dive into the numbers that are going to shock you, do me a favor, hit that like button and subscribe to the channel, because we're about to unpack one of the biggest economic stories that mainstream media keeps glossing over, and you need to stay informed about what's really happening in the global economy. So here's the headline that should be on every news channel but isn't. China's softwood log imports dropped to just 2.6 million cubic meters in 2024. Now, you might be thinking, okay, that's a lot of wood, but what does that actually mean? Well, let me put this in perspective for you. Back in 2014, China was importing 5.3 million cubic meters of softwood. That's not a small decline. That's not a market correction. That's a collapse. We're talking about a 51% drop in a decade. That's half the demand vanishing into thin air. And if you're sitting there thinking this is just about trees and lumber yards, you need to understand something crucial. Softwood is the skeleton of residential construction. It's what holds up walls, it's what frames roofs, it's what makes building homes possible at scale. When softwood imports crater like this, it's not because people suddenly decided they don't need houses anymore. It's because the entire housing construction industry has hit a wall so hard that the reverberations are being felt from Beijing to New Zealand, from Russia to the United States. Let's talk about where this wood was coming from, because the supply chain tells us everything we need to know about the geopolitical and economic shifts happening right now. New Zealand used to be China's softwood sweetheart. In 2023, New Zealand shipped 3.4 million cubic meters of logs to China. But by 2024, that number dropped to 2.1 million cubic meters. That's a 38% decline in just 1 year. Think about what that means for New Zealand's forestry industry, for the port workers, for the entire ecosystem of businesses that depend on that trade. It's devastating. But here's where it gets even more interesting. Russia, despite all the international sanctions and geopolitical tensions, has actually managed to increase its market share in China's softwood imports. Russian logs now make up about 15% of China's total softwood imports, climbing from around 275,000 cubic meters to roughly 390,000 cubic meters. While New Zealand is watching its exports to China collapse, Russia is quietly filling some of that gap. And why is that? Simple economics and geography. Russia's timber is closer, it's cheaper to transport, and frankly, China doesn't have the same political concerns about buying from Russia that it might have about other suppliers. The United States, on the other hand, is almost completely out of the picture. American softwood exports to China have plummeted by more than 94% compared to the peak years. We're talking about a trade relationship that's been decimated, not just by tariffs and trade wars, but by the fundamental reality that China simply doesn't need American wood anymore because they're not building like they used to. Now, let's get to the heart of the matter. Why is this happening? Why has China's appetite for softwood dropped so dramatically? The answer is staring us right in the face, but it's so massive that it's almost hard to comprehend. China's housing market isn't just cooling off. It's in the middle of a crisis that makes the 2008 American housing crash look like a minor correction. For years, decades even, China's economic growth model was built on one simple foundation: concrete and steel. Build cities, build apartments, build infrastructure, and the economy will grow. Local governments sold land to developers, developers borrowed money to build massive residential towers, and people bought apartments not just to live in, but as investments. It was a cycle that seemed unstoppable. But like all bubbles, it had to pop eventually. The cracks started showing a few years ago, but 2023 and 2024 have been absolutely brutal. Major property developers that were once considered titans of the industry are now drowning in debt. We're talking about companies like Evergrande, which defaulted on more than $300 billion in liabilities. Country Garden, another massive developer, has been teetering on the edge of collapse. These aren't small players. These are companies that were building entire cities. And when these developers started failing, the entire construction pipeline seized up. Projects were abandoned mid-construction, leaving ghost buildings and half-finished apartment complexes scattered across China. Homebuyers who had put down deposits found themselves stuck with nothing. Suppliers weren't getting paid. The whole system that had kept China's economy humming for so long started breaking down. Here's the thing that's really important to understand. In China, somewhere between 60 and 70% of household wealth is tied up in real estate. Think about that for a second. In most Western countries, people diversify their investments across stocks, bonds, retirement accounts, maybe some real estate. But in China, for the average family, their apartment is everything. It's their savings account, their retirement plan, their children's inheritance, all rolled into one asset. So when property values start dropping, when developers start collapsing, when construction stops, it's not just an economic problem. It's a psychological crisis that affects hundreds of millions of people. The Chinese government has tried everything to stop the bleeding. They've lowered interest rates, they've reduced down payment requirements, they've eased restrictions on who can buy property in certain cities. But here's the problem. You can't force people to buy houses they don't want or can't afford, especially when they've watched their neighbors lose their life savings on unfinished apartments. And this brings us back to the softwood. The reason those import numbers are collapsing isn't because China found a better material to build with. It's because they're simply not building anymore. Housing starts, the number of new construction projects breaking ground, have fallen off a cliff. In some cities, construction activity is down by more than 50% compared to just a few years ago. Developers aren't buying land. Banks aren't lending to construction projects like they used to. The entire machine has ground to a near halt. Now, you might be wondering, what does this mean for the rest of the world? Because China doesn't exist in a vacuum. When the world's second largest economy, the world's biggest construction market, suddenly stops buying, everyone feels it. New Zealand's forestry workers are losing jobs. Shipping companies that specialized in the China route are struggling. Equipment manufacturers who sold machinery to Chinese construction companies are seeing orders dry up. This isn't just China's problem anymore. It's a global economic headache. And here's something that should really concern you. China has been the engine of global growth for the last 2 decades. When China was building like crazy, it needed iron ore from Australia, copper from Chile, machinery from Germany, lumber from New Zealand and Russia. All of that demand created jobs and economic growth around the world. But if China's construction sector stays down, if this housing crisis doesn't get resolved, we're looking at a significant drag on global economic growth for years to come. Let's talk about what the Chinese government is dealing with right now, because the challenges are staggering. They've got an aging population, which means fewer young people buying their first homes. They've got a demographic crisis where the working-age population is shrinking. They've got local governments that are completely dependent on land sales for revenue, but nobody's buying land anymore. They've got a banking system that's loaded up with bad loans to property developers. And they've got hundreds of millions of people whose primary source of wealth is sitting in an asset class that's declining in value. The government's in a really tough spot. If they let the housing market crash completely, you're talking about potential social instability on a scale that could be really dangerous. But if they try to prop it up artificially, they're just delaying the inevitable and making the problem worse in the long run. They're essentially trying to manage a controlled descent, hoping they can deflate the bubble slowly enough that it doesn't cause a complete economic collapse. Recent policy changes show just how desperate the situation has become. The so-called three red lines policy, which was implemented to prevent developers from taking on too much debt, has been quietly abandoned in many cases because enforcing it would mean even more developer bankruptcies. The government has been encouraging banks to extend loans to troubled developers, not because these are good investments, but because letting them fail would be catastrophic for the entire financial system. And here's where the softwood imports tell us something really important about the future. Those numbers aren't just looking backwards, they're looking forwards. When you see imports cut in half, it's not just reflecting what's happened, it's telling you what's coming. Construction companies don't order lumber for projects that don't exist. They don't stockpile materials when they don't know if they'll be building anything next year. Those import numbers are a crystal clear signal that the construction industry doesn't see a recovery coming anytime soon. Industry analysts are trying to put a positive spin on this, talking about market stabilization and adjustments, but the data doesn't lie. 2.6 million cubic meters of softwood imports in 2024 is not a temporary dip, it's a new reality. And unless something dramatically changes in China's housing market, unless demand comes roaring back, those numbers are going to stay low or potentially go even lower. What's particularly interesting is how this is reshaping global timber markets. New Zealand, which was so dependent on Chinese demand, is now desperately trying to find other markets. They're pushing into India, Southeast Asia, trying to diversify away from China. But here's the reality. There's no other market in the world that can absorb the volume that China used to take. India's construction market is growing, but it's nowhere near the scale of what China was at its peak. Southeast Asian countries are developing, but again, we're talking about a fraction of the demand. Russia's increased market share is strategically significant too. As Western countries have tried to isolate Russia economically following the invasion of Ukraine, China has become an even more important trading partner for Russian commodities. Timber is just one piece of that puzzle, but it shows how geopolitical tensions are reshaping trade flows in ways that might have long-term consequences. For the average person watching this, you might be thinking, okay, this is all very interesting, but how does this affect me? Well, if you're invested in global markets, if you have a retirement account with international stocks, if you work in an industry that's connected to global trade in any way, China's housing crisis matters to you. When the world's second-largest economy slows down, it creates ripple effects everywhere. Commodity prices adjust, shipping volumes decline, manufacturing slows, and all of that feeds through into employment, wages, and investment returns. And if you're in the United States or Europe, you should be paying attention because this is a warning. China's housing crisis was built on the same foundations that created America's 2008 crash: too much speculation, too much debt, and the belief that property prices could only go up. The scale is different, the details are different, but the fundamental mistake is the same. When an entire economy becomes overly dependent on one sector, especially real estate, the correction can be brutal and long-lasting. Looking ahead, the big question is whether China can find a new growth model. For 30 years, it was all about building things, manufacturing things, exporting things, and constructing cities. But that model has reached its limits. The country has enough apartments for its population, In fact, there are estimates that China has enough empty apartments to house tens of millions of people. They don't need more ghost cities. They need to transition to a consumption-driven economy where growth comes from people buying services and products, not from building more concrete towers. But that transition is incredibly difficult. It requires changing deeply ingrained economic structures, shifting how local governments fund themselves, reforming the banking system, and changing cultural attitudes about investment and savings. It's the kind of transformation that takes decades, and in the meantime, you're going to see continued pain in sectors like construction and all the industries that feed into it. The softwood import numbers are going to be something to watch over the next few years. If they start creeping back up, that could be a sign that China's housing market is stabilizing and construction is picking up again. But if they continue to decline or stay at these historically low levels, that's telling you that the crisis is deepening and there's no quick recovery in sight. What we're witnessing right now is one of the most significant economic transformations of the 21st century. China built more in the last 20 years than probably any civilization in human history. And now that era is coming to an end. The cranes are being dismantled, the construction sites are going quiet, and the imports that fueled that building boom are drying up. The world that was shaped by China's insatiable demand for materials and resources is changing, and we're all going to have to adapt to that new reality. So the next time you hear about China's economy, don't just listen to the GDP numbers or the official statistics. Look at the real indicators. Look at things like softwood imports. Look at shipping volumes. Look at commodity demand. Those numbers tell you what's really happening on the ground. And right now, they're telling us a story of an economy in transition, struggling with a crisis that could define the next decade. If you found this deep dive valuable, make sure you hit that subscribe button because we're going to keep following this story as it develops. The Chinese housing crisis isn't going away anytime soon, and understanding it is crucial for understanding where the global economy is headed. Thanks for watching, and I'll see you in the next one.